When you look at the concerns, right, so you could have a softening of stance on trade, but as long as these allegations or these reports on cybersecurity stay, does it make it even more difficult?
Yeah, I think the relationship between China and the U.S. is a multifaceted one. There are tensions in a number of different places, and the security elements that you mentioned are clearly one part of it. I would say, I think, one should be, reasonably cautious about the chances for any big breakthrough at the G20 summit. But the one fact that I do mention is when you look across asset markets, a lot of China-related assets are pretty downbeat. And the relationship with the U.S. is one important facet of that, but China's growth is another important feature that we are very focused on, which is that you're getting to levels, partly because of these trade tensions, but partly also because of their own domestic tightening since the start of the year, where China's growth is probably getting to levels that is pretty low or intolerably low for the regime. So the kind of support that they are going to provide going forward is going to be a key aspect of thinking about China and all things linked to China.
But Kamakshya, when you look at China, do you worry that at some point policymakers will run out of tools to deal with the downturn in the economy?
In the longer term, it is a concern, especially when you look at the debt overhang and the leverage that is in the system. I worry about that less in the short to medium term. I think they still have the ability to expand credit. I think they still have the ability to cut rates lower than what they have done so far, and probably encourage a bit of a boost on the fiscal side as well. So I think there is still room. There are still tools to support growth here. Obviously, it sort of makes some of those longer term debt related problems worse, and I think that is something that even they are concerned about and focused on.